Hi everyone, and thanks for tuning in. In today's video, we'll walk through a real-life example of how a couple earning $160,000 combined with $45,000 in savings can buy the first home. We'll be covering key government schemes to make it possible. We'll look at estimated home loan repayments, and we will be sharing a powerful tip of how this couple can save 10 years off their mortgage. Let's dive in. So here's the couple. Each are earning $80,000 a year. They have one child together and they've managed to save $45,000. They have no other debts and they are both eligible under the first home buyer schemes in New South Wales. They are eyeing out a $750,000 property with just a 5% deposit. The first home guarantee makes this possible, and the best part, no stamp duty thanks to the New South Wales First Home Buyers Assistance Scheme. Alright, we will now look at the required loan structure. They will need a total of $712,500. This will be assumed at 5.89% as a variable interest rate. This works out to be $4,222 per month in repayments. Thanks to the first home guarantee, they will be able to borrow 95% of the purchase price and not having to worry about lender's mortgage insurance. Finally, the loan term will be over a 30-year period. Looking at the household budget and serviceability details, the couple brings in just over $13,000 per month before tax, or after tax terms, it's just over $10,500. Their living costs are around $4,700 per month, and the proposed loan repayment is $4,222 per month. That will leave them a comfortable surplus of just over $1,600 per month. Now, you got to take into account the property-related expenses such as strata and council fees, but that will slightly differ depending on the property that you're purchasing. So the total funds the couple will need to complete the purchase is just over $753,000. Now that includes the estimated legal, reports and title fees. Because they have $757,500 available, after the transaction they will have a surplus of just over $4,000. Because they're both first home buyers, they will have access to the government schemes. The first is the First Home Guarantee Scheme, which lets them purchase a property with a minimum 5% deposit, but no more than 20% of the purchase price. This will allow them to avoid having to lender's mortgage insurance. And the second is the New South Wales First Home Buyers Assistance Scheme, which means that they won't have to pay stamp duty on this $750,000 property purchase. Now, this is quite a significant saving and really lowers the barrier to entry for first home buyers. See, the key takeaway of this video is to demonstrate how home ownership is actually much closer than what many first home buyers think it is. With the right advice, the right loan structure, as well as access to the government support, a family with a $160,000 combined income can make this happen. Here are a few common mistakes that we see. Number one, not tracking your cash flow or budgeting properly. Forgetting to review your home loan each year just to make sure it's still the right fit. Also not considering your personal or home insurance, or if there are any changes in your situation or if something should happen, that you don't reach out to either your broker or lender. Alright, here are some tips. If followed, it will make your journey a lot easier. Starting with number one, get advice from an experienced mortgage broker who will actually listen to you and understand your requirements. Number two, get a pre-approval before you start house hunting. Nothing is worse than when you make an offer and not being able to get the approval at the bank. Use a licensed conveyancer or solicitor who will take care of the legal work for you. It's also a good idea if you were to visit the property during different times of the day, for example, even in the evening or at night, just to get a better understanding of what the place will be like if you were to actually move in. Also consider your future, whether you plan to live in it for the very long term or if you are looking to rent out the property down the track and turn it into an investment. Please also keep in mind that under the First Home Guarantee and the First Home Buyers Assistance Scheme, the eligibility requires you to live in the property and you cannot purchase it as an investment property. And finally, when you do your research online about home loan products, don't just simply look at the interest rate, but also pay attention to the comparison rate, which is a percentage that represents the true cost of a loan, including the interest rate, as well as all the associated fees and charges over the life of the loan. It's really a tool that helps borrowers to understand the overall cost. Now, here is where we capture the minimum repayment schedule. So, based on the loan of $712,500, interest rate of 5.89% per annum, the monthly repayments are $4,222. The total interest paid on the loan over the entire period is $807,000, and the total repayments will be over $1.5 million. Here's another graph of the minimum repayment schedule, and as it can be seen in the initial years, most of your repayments actually go towards the interest rather than reducing the principal. It's only later in the loan term that you start to pay down the principal more quickly. And here's a tip. If the couple wanted to become financially free earlier, one way is to make extra repayments into the home loan. In this example, if they were to pay an extra $1,000 per month, they will save approximately 11 years of their home loan. In terms of interest saving, it's about $338,000, and it will reduce their total interest payable to just under $470,000. Alright, now let's compare the two options. With the standard minimum monthly repayments of $4,222, it'll take the couple 30 years to repay the loan. The total interest they will pay is just over $807,000. Now, if they were to add $1,000 extra each month, making it $5,222, they will end up paying off the loan in just 19 years, and the total interest payable will be just over $469,000. Now that's a difference of $338,000 saved, as well as 11 years shaved off their total home loan. Alright, so that's a wrap. Thank you so much for watching. If you found this helpful, please hit that subscribe button below and turn on the notifications so you won't miss any future updates. Now, if you do have any questions or any topics that you'd like me to cover, please drop it in the comments below. We'll love to hear from you. I hope to see you in the next video.